Dun, 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 dun. Morning, everybody. What's going on in the hood? All right, so we got flat open in the markets, guys, today. In essence, after a big run like yesterday, you could have a digestion day. Mark was up, like 950 points at the end of the day. So you typically will have maybe a little bit of digestion. I think there's two things to watch here. How does it react around yesterday's highs? That'll probably give us like a secondary kind of move. And if we start to fade back, we've got all sorts of support here from the bottom of the gap bar to, even if you get a little bit of a gap fill, you got more than enough support here. This market is just in a straight up not grind right now. We probably are just drifting our way back, towards highs, and we'll see what's up. I like a flat open though. Yesterday we gapped up a lot and it took out a lot of range in the markets. Today, like, we've got a flat open. A flat open is really the way to go. If you're really thinking about, like, when you're day trading, a flat open gives you a lot more possibility because, you can go long or short, right at the open, depending on which way things play out. But you also know, like, usually a flat open, if, like, the market is in a bullish thrust, all your stocks won't gap up, so you can shred them if the market starts to push right off the bat. I like that. So I think, flat open is probably pretty good. We got to be a little bit careful. We're starting to get, we're on day 4 of a move, so like probably in the next couple days, usually once you're in like 5-6 days of a move, you'll get like these kind of sharp pullbacks. If you start to run 4 or 5 days, you'll get like, and these pullbacks end up, because there's a little bit of excess volatility, you'll get like a decent amount of, range on the pullback. So you got to be careful. Like, if you're a swing trader, for example, and, the market is up 5 or 6 days in a row, those are usually the spots where you want to, like, be laying off some of your position because you're due for a pullback and then you want to kind of reload as you're getting towards, support and things like that. So just like a couple things to be mindful of. Let's take a look and see, what's popping on the earnings, and then, we'll go from there. All right, so if you go here, like, you got all sorts of stuff popping up over here. Baidu's got some earnings out. Looks like more than triple the revenue. Sounds pretty good to me. You've got a big kind of trend line. You've got a big breakout here, though, out of consolidation. So when you think about, like, okay, stock has some fresh news out, right? So you see this gap, it's got some fresh news out. If you think about, like, a stock that's busting out of something with fresh news, usually like a neglected stock or something that's been, like, stuck for a period of time, when those have earnings come out, they tend to be the ones that can move the most powerful because it's been, like, off everybody's radar for a period of time. And now, like, you're announcing earnings and it's a surprise. And anything that's a surprise, that is usually good, right? Right? You get a surprise, you're feeling pretty good about it. It's up already 10%. Baidu does work pretty well off pullbacks, though. Like, I would keep this on the list for a potential, potential PR earnings play. So, like, when you look, like, always watch, like, those first pullbacks. When you're looking at any stock that has news, like, what you really always, like, the ideal, especially if you're new, for, like, if you're a little bit more advanced, there's like a whole host of different kinds of breakout and remount type of patterns that you can do. But if you're, like, just brand new and you're figuring out, like, just how to get consistency, what you really always want to be doing is trying to focus on, like, 1 or 2 types of patterns. The easiest ones to do, like, when you have stocks out with the fresh news, is just the first pullback. So, like, you get, like, a thrust, that first pullback, right? As soon as you get a green candle to hold, it could be the VWAP, the 9 EMA. The first candle is really the highest probability pattern. That's the one that'll probably help you grow your accounts and get where you need to go. because it's the most stable, but it also gives you the best RR in terms of you're hitting something on support, and then you get that potential upside. So always watch for that first pattern. So anytime you see anything with like news out or something like that, like a Baidu or something like that, when it opens today, watch that first pullback. That's usually a good spot to potentially get in. Same type of deal, right? Like yesterday we were trading this, mRNA. And it was very just simple pattern. We sat there, like it opened up, right? We just wait. Taps into the 9 EMA, you get the green candle to hold. So now you got a little bit of confirmation that it's starting to hold there. And now you got like your thrust. There's all sorts of patterns out there, but that's usually like that first pullback is, I think, probably the easiest one to do. But emotionally or mentally, it's like the biggest head F word because you have to wait for it, right? Like, when you're trading breakouts, you get to chase. You're like, and it makes you feel good until you realize you chase. First pullback is a little bit more difficult because you got to spend like 5-10 minutes like stalking it and watching it and waiting for your level to hit. Maybe it doesn't hit. And then you're like, okay, then you pull the trigger. So just something to be mindful, a little bit long in the tooth. What's the term? Long in the tooth, short in the cock, right? That's not a good combo. That's not a good combo unless you're from Orlando. Now, this one, like at some point, I think one more big thrust. I was thinking there's a gap fill over here. There's a gap fill over here. And once that gap, for me, like I was kind of sitting there staring at it yesterday, I thought maybe it's making a lower high. But ideally, like once this gap fills, we'll know, like we'll have a clear picture of where it can go. But I think once that gap fills, that's when I really want to kind of look at this thing for a potential short. So maybe watch it like 21, 22, 23. I think that's going to be a good spot. Yeah, Orlando seems like Orlando's a strange place, Miss Priceman. There's people doing all sorts of meth over there. Jason, I got tons of hats, man. Tons of hats. Tons of hats. The only rule is you got to come stay at my house. Only rule is you got to come and stay at my house. Because I ain't go to no post office to mail a hat. I don't got masks and gloves. So I ain't go to that post office yet. All right, let's add in ACB, Baidu. AAP had earnings out today. Post lower fiscal loss, sales sees quarter J, blah, blah, same store sales. AAP's only got a 67 million share float. You're starting to come out of like a range here. You're rebounding over the 200 SMA. That's going to be the sweet spot. I would add this to the list. My only worry on this one is is there going to be a spread? Damien, I'm waiting on. We don't have any double XLs. All I got are mediums and larges. I have a shipment, and my hat guy is what you call it, on hiatus. Double XLs, man, that's a rare find. That's a rare find. It's like I got my best friend Omar. He wears a smedium. Like a smedium is tough. Like if you're wearing a friggin' smedium, you're like 1 in a million as a man. Right? Like where am I supposed to find a smedium? Small, medium. Dun, 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 dun. Love, look, a lot of these airlines are starting to pop up. You got UAL, Love, Safe. Right now, as the market is starting to just push higher and higher, what's essentially happening is with the market up this high, people are starting to look at stocks that haven't moved, stocks that are sitting on bottoms. Any stock that's like sitting on a bottom that hasn't moved as the market starts to get towards highs is starting to get picked up. So you can have like the biggest like turdzilla of a stock, like a UAL or DAL or Spirit Airlines. God forbid anybody ever fucking fly on a Spirit Airlines. It's like the seats hurt your back. Like there's like metal protruding through them. They put you on like a 1967 like Boeing, 714, and you can tell like you're like, man, was this thing? Did they fly this in Nam? Like, is that what's happening here? That's usually what goes on with Spirit Airlines. It's a big turd, but you can fly somewhere for like $100 till they get you with all the knickknacks. All the Indian people are always up on the Spirit Airlines. I got a Spirit Airlines Air Miles card. Terrible service, terrible plane. I always feel like I'm gonna die, but as an Indian, I just have to do it. So you're gonna see like you got a double bottom here on UAL. Like you're starting to see some of these things get picked up. They're all up 5% though. I can't chase up some airline, some smelly airline like Spirit Airlines up 5%. If you want to trade these things, like you're starting to get double bottoms on these. So wait for a pullback intraday. If they start to hold, right, first pullback, watch how they do. People are going to start picking up these laggards, these things like Southwest and stuff. The things that, the stocks that haven't moved, irregardless of what they are. So it doesn't matter what the stock is right now. When the market gets near highs and you got the pump on, right? You got a Trump pump, a Fed pump, a penis pump. You've got all sorts of pumps coming. So what's going to happen is that rotation, people are going to start picking off stocks at a bottom. Easiest thing to do, run an easy scan on your TC2000. And what you can do here is like, you can run a scan for like just stocks that haven't moved at all. Or like the easiest thing probably to do is I would run in like, if you built an easy scan for, let's say like, you go price growth 1 year and you go for the ones that have moved the least. So like you go do a rank and then you want the ones that have moved the least. So like you go like maybe the bottom 25% of stocks. Do something like that. Then add in the scan. And then what you want to do is start to add like filter for volume and price. Now what's going to happen is you're going to have like a whole area of stocks that that haven't moved, that are like the big turds that are going down. So like add in like a 500,000 share condition. You always want to add in a price condition so you're just not getting like pennies. I would go in with the price condition, like say 5. Now what's going to happen is, see, now you've narrowed this thing down to 103 names, and you can keep adding more and more filters. So what that'll do is it'll show you a list of stocks that are sitting on the bottom that haven't moved. Like these airlines, you start to filter through them, and you'll start to see like which ones are going to start to go. So I would add these airlines in if you like trading airlines. I won't trade them. Airlines stink to trade. They give me heartburn. I'm already lacking hair. Yeah, I already got enough stress in life. But these, frankly, I do think they go. They're, everything is getting picked off the bottom right now. Let's look on the downside and see, what's going on. Dun, 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 dun. CVNA is still 5 million shares. So that's an offering. So when you get like a big gap down, but it's an offering, that's different than if you had a stock that had like, hey, we just had earnings out and, we're shitting on our shareholders. That's different than an offering, which is also shitting on your shareholders, but that's more of a dilution than, hey, I've got terrible earnings out. So that's not really the same type of gapper that you're looking for. All of this stuff is junk. So let's just talk about the list of what is going to be cooking today. Top 5. ENPH, man, this thing was, first of all, you had a nice breakout over highs yesterday. You finally cooked over that old earnings high. The stock just had earnings out a couple weeks ago, so it's got that out of the way. The earnings were supposedly fantastic. It's in a big trend. You can see here, like you got a nice flat top breakout. It moves pretty steady. I would add this to the list as kind of as something that's got a little bit of the goose in the gander. BYD looks ready to go. If you see here, and the key on this one is just going to be, can it hold at the 9 EMA here? If it can, and you break over this trend line, like this thing is ready to go. I mean, it's ready to go. Like it's just got to cook over like that level, and you want to start building into it. That thing is good, and frankly, it moves really well. Now, it has been trading like, it's been trading like crap the last few days. That is the nature of pullback. So when you get a stock that's pulling back, as it pulls back, it's going to trade like crap because it's getting sold off. That's hence the nature of the word pullback. We're getting right into that sweet spot though. We start to push out of this, especially with the market running hot the last few days, and this one's been pulling back. I think this one's got a chance to go. D-Dog, this one just had a big earnings gapper a couple, 6-7 days ago. You're starting to tighten up on this. You may need another day or two as the 9 EMA catches up, but you're getting right into that sweet spot where this does have a potential to go. Watch this trend line break, on a little bit of a larger time frame. It does move pretty well. Like, if I see any kind of intraday dip on this thing and it starts to hold, I start building into like a red to green or something along that end. I'll take this one and put the shred on. Ideally, I'd like one big pullback towards the bottom of the range, and then we can start to build our way into the breakout. It could need another day or two of backing and filling before it goes. You can see here, like you may have to just back and fill a little bit and tighten this up, but it's getting there. Whether it goes today or in the next, 2 days as it kind of fills in this. It's, whenever you're doing trading or you're looking at charts, you got to use your imagination. So if a range is wide, you got to imagine how it fills in the range. Just like when you're, sleeping with your wife and you're imagining your high school sweetheart, right? You got to just imagine what could happen so that you know exactly where to go and what to do. Just backing and filling, let that thing tighten up. I think we're going to be good to go. Now, this FSLY has been like a daily trader for us. I think one more pullback on this, if we get this thing down to 34, 35, I think that's going to be a potential good spot for like a little bit of a bounce. And then, of course, like these are daily traders for us at this point. mRNA is gapping down like 4%. I wouldn't be surprised to see this thing sell off a tiny bit. And the reason is, like, if you remember, like, when Gilead had, like, its news out that they solved, world hunger or whatever it was with the coronavirus. It sold off, right? It sold off, and after the fact, and, like that, some of that stuff kind of happens in these type of names. Now, this had an offering out today. So what you want to see, it's like $40, Wolf. If you want to see $50 maybe. If you want to see how this acts, there was an offering today at 76. If you start to see it hold at its offering, there might be some institutional kind of support on this thing around that price. If it starts to hold 76 and builds, I'll look at this for a potential long. But otherwise, it may need to pull back. If it busts lower than that, it's probably going to have to pull back into 70, maybe 67 before it's ready to go. Same thing with NVAX. Like this thing it's already cooking. It may need to pull back, but frankly, it's just a daily trader for us at this point. If you start to see, I was hoping for red to green on this bad boy. My worry on this is like now it just used up all its intraday range, probably like in the pre-market. It dipped down to 51, you're already at 60. I like these names, but it's more of a matter of like, do they need to rest out? Do they need to rest out for a little bit, or, do we have more juice? We'll see how it reacts around 62. There's a couple things to be mindful of. The spread on this it started to spread out a little bit. There started to be a big spread in it, like kind of towards the middle of the day as the liquidity dried up. So if you start to see this thing hit like towards highs and that spread starts to widen, that usually tells you underneath the scenes that it might dump, all right? Usually, like if you're sitting there, sitting at a resistance level on a really extended stock, right before they pull it, that spread will widen, and everybody who's stuck in 1,000, 2,000 shares, right? When that bid starts to lower, but the ask is the same, you're faced with a choice. Do I just market order this shit and get out and take a extra 30, 40 cent loss? Or do I pull and pray and hope that it breaks out? Man, I've been stuck in that so many times. So what happens is if that spread starts to widen out, I'll like, if I have, say, 2,000 shares, 100 shares at a time, man, I'll start like kind of peeling off a little bit here or there in between the bid and ask. Enough not to spook it or really show anywhere. May take like 50 executions to get out. That's the problem when the spread widens. Because if they pull it, and it may not, like sometimes it's a fake out, but if they pull it and that spread is widened, you end up losing like an extra $500, $1,000 sometimes. That's my worry with this one, is it's starting to get really extended, and you started to see a little bit of the liquidity dry up. We'll have to be just careful of this. Now look, JNUG had a rest day yesterday. I think this thing is ready to go again. Gold miners are looking really good. If you look at the GDX, you've got a kind of 3-day consolidation over the breakout now. That one's looking really good. So when, GDX is going, I like to play JNUG. That's the, ETF for this bad boy. Let me go to log chart here. You've had a couple days of kind of ranging out here. I wouldn't be surprised to see this, thing start to really push over into this way over the next, few weeks. It's a pretty good looking, chart. We'll see what's going on. But that's the list. Let's, there's not too many earnings plays out today. Baidu, ACB, AAP, and it looks like airlines. And then you have your daily traders, which is like these biotech stocks, a couple other names. Let's be mindful. Yeah, I saw a bunch of downgrades come in on, on this DraftKings in the pre-market. Watch this thing. If it spikes up and then it starts to kind of roll over, you may get a fade into this kind of down into the 26, 27, 25 range. It's due for a snap anyways. If they start to pull it, just be mindful, as this thing was like $10, right? So that's the list. I'm sticking to it. Let's go have some fun today. Yesterday was hot. I don't know if we're going to get that same kind of action as we did yesterday, but we always make some action regardless. Keep an eye on these bad boys. Let's go do what we do. Cruise lines were moving yesterday, so that's, watch how they react around yesterday's highs. You can get a secondary trade. Man, hey, Wes, I.N.O. looks okay. I will say that, man, it sucks to trade. Like, it stinks to trade. Like, it really does. It's a hard trader, and that seems to be, like, give you a little bit cleaner opportunities. Just something to, if you're day trading, of course. Swing trading, you never want to swing trade, really, stocks like I.N.O. because they're all just pump and dumps for the most part. Does that make sense? Good. BYND, top of the list. DraftKings, potential short, top of the list. Rock and roll. Guys, as always, I will be in the Bulls on Wall Street Discord room. The video link is always posted in the alerts channel. Video link is always posted in the alerts channel. Let's go do what we do. Let's have a little fun.